This Nasdaq leverage band strategy looks attractive because the live BestFolio catalog shows 27.2% annual growth over about 40.7 years. But the first number I care about is the drawdown, negative 95.8%. If you cannot survive that number, the return is just decoration. In this video, I'm going to show the rule, the growth curve, the worst hole, and the kind of investor who should probably walk away. Most investors compare strategies by annual return and stop there. That is backwards. The strategy has to be held through bad years, noisy recoveries, and periods where something simpler looks better. This is the honest angle flagship, the annual return is outrageous, but the path is almost unholdable. The real question is not whether the backtest looks impressive. The real question is whether the strategy gives you a reason to keep following it when the chart turns ugly. This Nasdaq leverage band strategy is a rules-based portfolio. The backtest covers 1985 to 2026. The leverage is the point and the danger. A high compound return is meaningless if the drawdown makes you quit. The important thing is that the rules are explicit enough to inspect, compare, and criticize. I like that because vague portfolio stories are easy to sell. Mechanical rules are harder to hide from. They either survive the data or they do not. Here are the current BestFolio numbers. Annual return is 27.2%. The worst drawdown is negative 95.8%. The Sharpe ratio is 0.71. Volatility is 57.1%. The United States stock benchmark has a worse drawdown around negative 55.5%. So the path matters as much as the headline return. The drawdown stays on screen because it is the number most videos quietly minimize. If you start with $100, the strategy ends near $1.8 million in this reconstruction. The exact path is not a straight line. There are long quiet stretches, sudden drops, and years where the boring benchmark looks smarter. That is why I showed the drawdown beside the growth curve. A final balance can make a strategy look inevitable. The year-by-year path shows how many chances you had to abandon it. The rule set is simple enough to say out loud, watch the 200-day moving average band. Own tqqq when the market is above the upper band. Own qqq when the market falls below the lower band. Except that leverage can still destroy the path before the signal saves you. That simplicity is important. A portfolio rule should be explainable before it is trusted. If the edge only works when it is described with 20 moving parts, I assume the backtest is doing too much of the selling. Here, the mechanism is visible, so the trade-off is visible too. Now the honest part. A 95% drawdown is existential. Almost nobody calmly holds through this path. The annual return hides sequence risk. A late crash can erase years of compounding. Leverage decay matters. Daily reset products punish volatile sideways markets. Backtest courage is cheap. Real money after a 90% loss feels different. These caveats are not footnotes. They are the price of admission. Sometimes the cost is lower return. Sometimes it is a deeper loss. Sometimes it is missing a rebound or looking wrong for years. The stress test is the maximum drawdown. For this Nasdaq leverage band strategy, that number is negative 95.8%. For the broad United States stock benchmark, the live catalog shows about negative 55.5%. Smaller is better, but smaller does not mean painless. A drawdown is not an abstract statistic when it is your account. It is the moment where the strategy has to justify why you should keep going. This is for viewers tempted by the highest compound annual growth rate in the table. Leveraged exchange-traded fund investors who need the downside shown first. Researchers studying why survivability beats headline return. It is not for someone who only wants the biggest possible number on a backtest table. The right user is the person whose temperament matches the failure mode. If the worst drawdown would make you sell, the strategy is too aggressive, no matter how good the ending looks. You can inspect this Nasdaq leverage band strategy on BestFolio, compare it against the rest of the strategy library, and see the same annual return, Sharpe ratio, volatility, and maximum drawdown in one place. Use the link in the description before trusting any headline return. Subscribe for more strategy research where the upside and the ugly parts stay on screen together.